Hi, everyone. JD White here. Welcome to the Retirement Cheat Code. Today, we're going to dive into a real life situation that I recently worked through with some clients of mine as they were quickly approaching retirement with a handful of outstanding debts. We needed to figure out which ones to pay off, which ones not to pay off, and what we were going to do with the whole thing. Thank you so much for watching this video. I hope you learned something from it and learned something from my clients. Let's get into it. So, my plan is here to occasionally give you some real life situations because I do work with clients. I'm encountering things that you're probably going through yourself. And I think it's worth sharing solutions or things that we actually didn't solve. For today, this couple was within 1 year of retirement. It was a married couple. The wife was no longer working. The husband worked for a large corporation. He had employer benefits, company stock. I'm going to lay out some of the debt numbers for you because they had a bunch of different debts that they had accumulated, kind of gearing up for retirement. You'll notice some of the debts have a trend here. But as they were approaching retirement, they were concerned about these debts and their mortgage and what they should do with the whole thing. So this is how we navigated the whole thing and decided what to do. So here's the numbers. 50,000 for a new truck, 8% interest. 20,000 for a new fishing trailer at 12% interest. 22,000 in credit card debt at a whopping 23% interest, and then 50,000 on just their primary mortgage on their house. It was worth over $1 million. That debt was only at 2.75% interest. They also had over 100,000 in his employer stock company at an E-Trade account that was all vested. He had access to all of it, but a lot of it had pretty substantial capital gains taxes if he were to sell it. So that's kind of the numbers. Here's where it gets a little bit interesting as far as the conversation with them goes. The mortgage was not a huge payment for them. They have plenty of assets. They both had Social Security. He had a small pension from a prior employer. So they have plenty of income to cover most of their living expenses, including their mortgage and the taxes and the homeowner's insurance on their house. The problem with the other debt, so the truck, the trailer, the credit card, is that the payment on those debts is so much higher because it is shorter duration debt. So, like the truck might only be $50,000 at 8% interest on a 5 to 7 year loan. That payment is $700, $800. So, as far as looking at our monthly living expenses, these debts were really eating into the amount of money that they needed to live on. So, what we did was I helped them navigate their online account with the employer stock in there. And we were able to kind of look through all of the accounts or the positions in the stock and sell off enough to cover the capital gains taxes and pay off the $50,000 in truck debt, the fishing trailer, and the miscellaneous credit card debt. And I don't think we got all of it, but we got most of it. While he was still working, he was able to pay off what was left. And so that kind of freed up all of that income that was being consumed by those debt payments. Now, as they transitioned into retirement, we had enough time to say, okay, now do we have enough coming in from our income to cover the mortgage and our normal living expenses plus the things that we want to do for fun? And it worked out really well that they had some accounts that we could work through to figure that out. We really wouldn't have wanted to send them into retirement without having a plan for that debt if it wasn't paid off. If we didn't have that account where we could pull those funds from, what do we do with that debt? We might ultimately have to push out retirement a little bit so that we can get that debt paid off, or figure something else out. Maybe we have to lower some other expenses. Maybe we need to stop contributing to a 401k and dump as much as we can into those debts to get rid of those first. So whatever might work, we needed to at least have a plan and a runway for figuring that out. So fortunately, in this situation, I can tell you that they are happily retired. They've been able to stay retired. So it did work out. And the recommendations to pay off those debts really did work out to their advantage. It doesn't always work out like that. Some of the problems that we run into don't actually have viable solutions. So if you enjoyed hearing me talk about, some real life situations that I'm encountering with my clients, go ahead and click that thumbs up button for me. It really helps me know what to do with these videos. If you're learning valuable stuff from the channel and want to make sure that you don't miss any future videos, click that subscribe button down below. I really appreciate your time as always, and we'll catch you on the next one.